G'day there. Welcome to the closing bell on the 28th of June for me. And this week we've had, inflation figures came out. Next couple of days in the stocks, they got pretty hammered. But then bounce back came along in the last couple of days, and stocks really ripped higher just heading into the end of June. And the reason that's interesting is because we know that the tax loss selling season has been happening, and they often happen more aggressively if we've had a bad period for the last year or two, which we have had, haven't we, in that mid-cap, small-cap space. I mean, how many stocks have been just absolutely killed? I'm sure you're holding one or two yourself that you wish you never bought, just like me. But this is often the period when it can end up being an inflection point. People give up the ghost, very serious selling. We saw the Emerging Market Index down 7% this month. So is it going to be a case of things following through and really selling off further after a weak month? Or could this be that point when the tax loss selling season is done, people have given up the ghost at very depressed prices, and all of a sudden it bounces back rapidly? So that's what can happen. So I thought today I'll just look at a couple of stocks that I thought could be a tax loss selling bounce back idea, that there'll be a few of those sort of things out there if the market can keep going. So I thought I'd just start with the ASX 200. We'll have a look at where things are. I just want to give you the lines in the sand. It's very much like that at the moment after 4 months of being stuck in a range. Just show you how I'm seeing things from the index perspective, and then have a look at a couple of trades that just might be worth having a look at or thinking about if the markets can continue rallying after June. All right, so let's have a look at the charts. So here we have the ASX 200 on a monthly basis, and I just want to make it really simple for you as far as how I'm seeing things so that you can know what to look out for. There's periods when the market really hands you great opportunities, and they only come along every few years, and there's times when it really is a struggle. You've got to be pretty wary that things could fall over, and we're sort of in that environment right now. So looking at this monthly chart, going back decades, I just want you to note the MACD on the monthly basis I've got down there, and that's just looking at the relationship between the 10-month exponential and the 20-month simple on the monthly basis. So just giving you a sense of the momentum of the rallies that we're seeing. And, it can be a bit of a hint when momentum is waning. So you can see when we've had a big sell-off, and you can see there prices getting far away from the 10-month moving average, moving a long way away from that 20-month moving average. So that's when the crash was on. So you can see there the MACD really getting belted. But what I want you to notice is that MACD turning positive, going above the moving average. I've got a 3-period moving average on that one on the monthly basis, just to track it quite closely. And what I want you to note just quickly is, when it turns positive or moves above the moving average on that MACD after a period of selling, just note over the last few decades, from that negative basis, and that's even right on the edge there of getting into zero. We've got one there. Sorry, that was a good one. And then we've got one there. So if you just notice what happened after that period, we go here, nice big run, go there, that's the beginning of that big move, go there, that's the beginning of that big rally. And from this lovely circle there, that's the huge rally into 2021. And then we've got these periods here where things start to turn up. But so, that is when it's sort of game on for me, when I'm really aggressively sort of adding positions and going sort of fully invested. When I've got that sort of a signal going on, that's really the easy time, isn't it? When you see after a period of selling pressure, and that's sort of what it always comes from. Here we got a year or two of selling, and then you get the buy signal and it looks good. we get the big clear out, and then, once it starts turning up, and it's sort of a similar thing, big clear out once things turn up. Here again, that was the crash, and then the momentum turns up. So that's sort of how markets move. Just think of it like that. You've got those periods which can be really difficult to make money, and pretty much everyone gets blown up. And then you've got the periods when all of a sudden it can just rally and rally and rally. And when you really want to be involved is when it's in those periods, isn't it? And you've got to try to sidestep the crappy times. So looking at where we're at now, it's not really in that sort of easy frame, is it? It's in positive, right? So everything's pointing up. So you've got to be giving the market the benefit of the doubt. So that's pretty much my point, is that the long-term trend is up. It's still holding above the 10-month exponential. Yeah, but the big risk, and this is where I go in close, is just that, you've always got to be wary of these false breaks. And I've said it before, and that's why I'm just going to make this very quick, this chat. A market will so often, poke its head trying to break out. And if it just can't carry on and then fails, you'll get a bit of a clear out. That's the major point to make. Like you get prices here, rallies for a month, trying to break out, and then can't do it, and you get a big sell-off. Here, breaks out, a few months above, and then turns back down. So that's just what I'm wary of. And that's, I guess, the point is, we've had on the MACD, it has actually, turned below the moving average there on the monthly. So the momentum is sort of waning. That doesn't mean it's about to go down. It just means it's not in that prime sort of momentum, high momentum market where you can see there, it's just marching higher and higher, and you're just going with it. It's sort of in that iffy sort of momentum where it's just gone sideways now for 4 months. Can it carry on? That's the big question. So with the tax loss selling done, does that now kick things into high gear? And it can take off. But the inflation figures weren't good. Property stocks got hammered during the week, and we had a bad sell-off initially, which bounced back. So there are issues around, and that's the point, is to say, look, if this thing just can't carry on to the upside and break out and trend, you do have to be a bit wary. So my line in the sand in that ASX 100, about 7,500. Which is not that much further down from here. We're 77.90, 300 points, that's 5%. So a monthly close below that level would confirm the monthly sell pivot and also be sort of back below the high from 2021. So that's when you start going, oh, watch out. This thing could have a bit of a mean reversion, and who knows how long that takes. And then turns back up again, all well and good. But it's just things could just sell off a bit and have a correction on a monthly close below 7,500. I just want to point that out initially. But until it does that, you have to just say that it could keep marching higher. The monthly trend is up. It's near all-time highs. And maybe inflation really comes off the ball rapidly. This tax loss selling finished. Maybe the buyers really stream in. Maybe we're about to just kick higher like this. I mean, it really could happen. Things are certainly set up to potentially do that. So I know I've got a foot in each camp. I'm happy to do that. Sometimes the market is a situation where you're saying, look, we've just got to buy. And sometimes you're saying, well, let's, be prepared for anything right at the moment. So that's really my view, is just waiting to see what can the market do. Can it bust out above this range of the last 4 months, or are we going to see a bit of mean reversion below 7,500? So that's just my current line in the sand. For a very long-term, investor, Again, you're looking at this big long-term uptrend, and as I've said before, that the Bollinger Bands on the 20-month, below that 3 standard deviation Bollinger Bands, like, well, you've got to be a bit wary, because you can see here in the crash below there, it just got absolutely belted. And for the last few years since the COVID crash, it's held above it very well. So you could really say you don't need to be too concerned until it really heads back below that level. So that's down at 6,500. So from that point of view, we could have a correction, lots of work, could take 6 months, and then just keep trending higher. So it just depends on your view as an investor, when you start to take evasive action, how much volatility you're willing to put up with to stay long. So for example, you buy here, are you willing to just, sit in it, put up with the volatility, be out of the money years later, just because you're waiting and expect prices to head higher? So let's just jump to a couple of stocks that I've seen that potentially are looking interesting for a bounce. De Grey has, as you'd know, huge gold deposit, but not producing, still a long road to go. And, hell of a lot of gold, that's for sure. They've had to raise a lot of money, which is probably why they haven't really been running with the gold price. So it's, they've just raised money around $1.10 to help move the project forward. And, it's been a bit of volatility around after, raising a lot of money, that sort of thing. So there's a chance that that volatility, and now that they've got the cash in the door, if gold prices can start rallying, potentially De Grey could start, I guess, having a higher correlation with the gold price, which it hasn't done, has it? I mean, it's been a pretty poor performer, probably because market knew they needed to raise a lot of money, while the gold price has really been rallying. So looking at it from the point of view of just the technical structures, I'm looking at this major wave here. And by the way, this is actually a trade in one of my services, just for full disclosure. We bought it back here and took part profits up here somewhere. And we're just holding, and we'll get out at break even if it can't carry on. But looking at this, how it's been trading, we've got that big wave higher there. So I'm really sort of looking at that and saying, well, if this uptrend can continue, where do you expect it to pull back to? You'll see we've got the monthly sell pivot there. Then we've got the monthly buy pivot there. So just looking at that, it's trying to turn up, but we've seen a bit more weakness with the capital raise. And you'll notice it's sort of pulled back to that buy zone area. So it's like if it is going to turn up, it's sort of from around here that you'd like to see it finding the buying support. So it's shaping up that this could be the area where it starts moving higher from. Also note just that 20-month moving average, and I like looking at those 1 to 2 standard deviation Bollinger Bands below. That's often, a good spot to be looking for the buy signals. As you see there, the monthly buy pivot in that area, not a bad spot to be looking for them. And it's a similar situation here. It's just a sort of an area where I'd be waiting for buy signals. So, we don't really have the signal yet on a monthly basis, although, there is a case to be made, which I can't really show you the theory behind it, that it could be. Anyone sort of picking some stock up, you're basically running away if it heads below that previous low there, which is down around, what's that, 72 cents. So that's sort of how it's looking. I think it is looking interesting to start heading higher from this area. Let's just have a quick look at the weekly. So looking at that shorter term price action, and again, you're looking at that whole wave and considering the buy zone area of that wave, sell zone. Oh, you can see there, the point of control coming through around $1.20. Yeah, just a good chance here. Weekly buy pivot coming in for the more aggressive trader. Maybe an opportunity there to start picking some up. But again, yeah, you're out if it can't hold above 72 cents. The other one I'm interested in, full on punt, this one is Weebit Nano. Now, this one really been under a lot of pressure. I think it has probably suffered from some tax loss selling. These are the sort of opportunities you look for in times like this. And look, Weebit, that it's a new technology for memory, non-volatile memory. It may never get up. Very high risk. This one's got a low chance of going up 5, 10, who knows, even more times if they can make it all happen. You can see there was a huge period here where they've just blasted off from $2 to $9, just absolute euphoria. And it's been a long drawn out process, really shaking people out mercilessly down to nearly $2. So, I'm just interested in this for a number of reasons. If we're looking at, the long-term waves, you can see that it is actually trending. So if we look at these waves here, now I even look at that trend and, can look at that wave. And, you do expect to see large retracements of these waves. If we just look at each wave individually, you'll probably notice as we look at these structures and how prices trade is, you get the big wave higher, then you get the correction. And often it's back to the buy zone, but here it didn't quite make it, just above. Then we got the next wave higher, and then you've got the point of control through there. And just note, the lots of work done in the sell zone, getting rejected, going back to the point of control, then down in the buy zone, lots of work done up to the point of control again, down to the buy zone again, and then bang, off it goes, all of a sudden out of the blue. That's sort of how it works, just shaking everyone out, confusing everyone until it's ready to do its thing. And so looking at the next wave higher that we've just seen is like, well, I'd say it's from there because, it needs to break out above the previous high to be a wave. So that's really going all the way from that low to that high. So I'm really looking at this sort of area as the buy zone area. And you can see it's already had one go at rallying out of there and failed. So this has been a really quite a serious clear out that we've seen from 450 all the way down to 2. There's been a lot of people who have capitulated on this leg down. And you can bet a lot of those people capitulating bought it for $6 to $8. And now they're dumping it at 2 and wondering what the hell happened. So that's how markets work, sucking people in at bad levels and shaking them out. So you're trying to figure out, well, can I join something after that shakeout? And as the June tax loss selling is done, do we see a bounce back through here? So I'd really want to see a weekly buy pivot at least, I guess. That'd still be an aggressive entry point. So I'd be looking at this and just saying, well, 278 is that high there. So look, and also note that it's also that low, the previous low. So how I'm looking at this is, we've had this attempted rally. We've then had the shakeout, all their stop losses are set up below here. and then we get the bounce back, and it can really run if it can turn back up and head above that low. So that's returning to the range. So, that area, weekly close above that $2.78, I think it could look quite interesting for a pretty quick bounce back, especially if we get a market-wide sort of rally and a feeling, a sense of that tax loss selling being over and the buyers coming back in. It can jump quite quickly, the market, when that sort of thing happens. But we've got the whole inflation problem, property stocks under pressure. Does that spook the market still? So, jury's still out. That's why I showed you the ASX 200 to say, look, I've got lines in the sand there, giving it the benefit of the doubt that it can head higher, but I've got a line in the sand pretty close if we get things turned down rapidly in the indexes. So I hope that all makes sense. Go hunting for some of those bounce back belters in the tax loss selling, brigade. There should be a few. Let's fingers crossed some buyers can return and we do see a bit of a bounce. That would be nice. But yes, be aware of what those downside triggers are, to be, a bit more wary of what's going on. All right, cheers. I'll come back with more next week.